What is going on, everybody? Happy Monday morning. Welcome back to the Man and Machine here, hosted by PeakBot, the, ready for this, Ben? Best automated trading platform in the game, bar none. I mean,
you said
it. We could just start saying it. It's true. That's why we're going to start saying it. I think the reason we don't say it is because we're humble and we're busy and we're growing. But I think we're the best automated trading platform there is for retail traders, and it's not even up for debate. So
I agree. We talked to a marketing agency one time, and they said, just start saying that, and people are going to believe it.
Just start saying that. And you know what everybody else says? Just start calling your bots AI. And it is AI. It's a loose definition around AI, but I'll tell you this. We've got some legitimate AI updates coming to our bots. We're not just fooling around. We're not just saying it. We'll explain everything. We're using some prediction software. We're getting involved. All right. We're getting very involved.
Doug really likes this idea. Carried over the weekend with him. I really like the idea too.
The bot scalper bot. So a bot that scalps when other bots are entering and taking positions based on those entries.
Yeah. Right. Well, the idea is the bot will know what the other bots are going to do, place an advantageous position right before they enter. But anyways.
No, you're right.
How's your weekend, Dillon?
It was good, man. Had a family party yesterday, celebrating a baptism. That was good. A lot of great food. I knew going into the party who was catering the event because it's a family friend who does the catering. So I'm like, I'm going because I know. We were talking about this yesterday. Like, you know what you're going to get at these events? Right? Or a wedding, when you get in the buffet food, your chicken franchise is probably gonna be a little dry or like soggy. These guys have it all figured out. It's incredible. It was so good. Every time we talk about how my weekend was, I seem to really only talk about what I ate.
Yeah.
Which maybe is a problem.
That's what you're passionate about.
It is. I am passionate about it. How was your weekend?
It was good. Lost a couple pounds around the head.
I was gonna say, yeah. You're floating on top a little bit here. Ben, do you want to tell the people we've discussed this live on air? Yeah, we did both get a haircut. I couldn't leave the house yesterday without one, but I do it myself. Ben is
we talked about it. I go to Great Clips. Not a big secret. I love it. It's right across the street from my house. I'll just open up the app. I'll put in my time. They'll send me a text. Hey, come over. So then I just drive over there and then I get my haircut and it's great. So I got somebody yesterday who was a big Eagle fan, had Red Zone on his phone. And I loved it because I'm all into fantasy football, watching football all day on Monday. And we're just watching the game and I usually do a 2 on the sides, blend it to a trim on the top. And we're just watching the game and all of a sudden he's going with the 2, keeps going with the 2, keeps going with the 2. And I guess I'm sitting there. I'm like, I guess we're not blending. I guess we're just going with it.
You're just hoping at that point that, your hair is probably screwed at least temporarily. It'll be fine in 3 days, 4 days, 5 days.
Yeah, it'll be okay.
You don't really care. That's the other good thing. Yeah. I don't think it bothers you.
I don't care.
Or you wouldn't go to Great Clips.
My wife cared a little bit, but she doesn't really care.
Yeah.
She cared enough to tell me, don't do that again.
Right. All right, cool. Yeah, no red zone while cutting hair. All right. Good tip. Excellent. All right, so good show here for us today. We've got stocks in real life, a good one. Ben, I'm looking at the stock backstage and I'm thinking, I want to form a real trade idea around this. I'm missing my trend spread days. I really am. Missing trend spread. I wasn't a fantastic performer on trend spread. For those of you listening who's familiar with this bot, not actually live and running for new subscribers much anymore. But anyway, we're going to take a look at Amazon. I have a new wheel play. So Ben, this is a funny story. I haven't wheeled for a while. I've just been King Condor, Shorebo, Ben bought in another account. And my one account was just kind of getting beat up by King Condor and Shorebo. We've talked about the results on Friday. It's in a little bit of a drawdown, both of them right now. Not worried about it, but I was like, I need some steady premium coming into this account. I was literally head on the pillow, almost asleep. And I remembered a wheel play that one of our traders is doing TQQQ. So we're going to talk about that. I
Okay, I love it.
grabbed my phone and added account on PeakBot. It only took me 8 seconds. I was back to sleep. But we'll take a look at that stock again here today too. And I guess that's most of it. We'll take a look at other positions. So, Ben, anything else before we dive in?
No, let's hop into stocks in real life because, like you said, we do have a good one today.
All right.
We are going to be talking about Amazon. Now, I think this is probably the most, I don't know what word to use, the most used stock in real life that anybody could relate to.
Yeah.
Right. How many packages a week are you getting from Amazon?
How many packages a week is my wife getting from Amazon?
That's the real question. But
it's slowed down. It has slowed down. I feel like when the seasons change, though, you start to, decor in the house and other things. You need new things. It's coming around again, but 3, still like 2 or 3. Like it feels like too many, but it could be 7 to 10 in the height of whatever that might be. Like holidays, forget it.
Oh yeah, Amazon's coming to your house multiple times a day.
Dude, how about these Amazon silent trucks? Dude, I'll be walking with my daughter and all of a sudden have no clue. Big Amazon truck on me. Just where'd this thing come from?
They look futuristic too. Like it's weird.
Yeah, they're nice.
Big windshield, like small nose of the car. It kind of looks like if you ever got into head-on collision, you're dead.
All storage, all packages. It's all it's meant for.
It's not like this anymore, Doug.
Best Buy, man. Yeah, Ben. I have a Best Buy 90 seconds from my house, the same one we grew up going to. I remember going to Best Buy and we watched a movie and we watched Transformers in Best Buy, the whole movie, while your first car was getting installed with subwoofers in the trunk.
Yep.
A Mitsubishi Eclipse.
Yep, first car.
Wow. Yeah, that thing was... Rip that thing around. All right, we got off the topic. Amazon. How many packages a week right now to your house?
Well, we just got a puppy a couple of weeks ago, so there's a package every other day.
every hour. All right. So yeah, you're absolutely right. As far as stocks in real life goes, I don't know that there's many that more people have experience with. Let's talk about the stock, Ben. I have the chart up here.
Pull it up.
Funny enough, I was just looking at my TQQ position, and at least at a glance, these stocks are acting very similar. I'm curious to see what the beta is on both of these. So let me pull this up, remove, get this on screen. All right, so here's Amazon, and I'm going to go just this for a second. So Ben, any guesses on Amazon's beta really quick before I look?
That's funny. I was just about to say, can we get the beta check on Amazon real quick? Because this looks pretty close. I'd say it's probably 1.2.
Look at this. Look how close it is. So 1 year beta is negative 0.09.
That's weird, actually.
Right?
That is
but
weird.
That's still, so what I was here, let's just look at SPX compared. So not as sharp movements, but I was looking at TQQ. All right, so here's TQs.
Yeah.
And then can you do a comparison on TradingView, like get 2 charts up at once? I don't know how to, but
yes.
Maybe you want to do it in the background, but yeah. As we know, we're looking back here. This is the beginning of February through April. All right, when we had quite a correction there, and Amazon has recovered well since then. Little chop in August, a big fallout. I would imagine the market did something similar that day. I don't know if that was a specific event for Amazon. We're looking at the daily bars here. Some red action over the last 3 days. Pre-market, though, we're up. Ben, how are futures looking overall right now? We're
We're looking good. We're looking
Okay.
good. Pretty fairly flat over the weekend, we'll say.
So is this all-time highs? Yeah. So we're at all-time highs for Amazon. Not a surprise necessarily. Okay, we actually hit what I would guess is an all-time high right here. Last Thursday, 2 Thursdays ago.
Mm-hmm.
So let's talk about a trade idea here, Ben. So all right, so here's the year on Amazon. I don't know if we want to zoom in or zoom out.
It looks like we were higher back in
Oh yeah, you're right.
January, February.
You're right. Sorry about that.
And then we dipped way back down to 160. Now we're way back up to 230. Call it. Yeah, I mean, for Amazon, I mean, what are you thinking about other than just a straight up spread here? I was gonna say it looks like we are in a bullish channel at the moment. I think we call that a bull flag. We need our resident candle study, Thomas, to tell us what these candles mean.
I have your indicator on here, by the way. I can see.
Yeah, look at that.
Not anymore. Oh, I don't want that. All right, so if we get, I don't know why this keeps gravitating toward here. Here's what I'm thinking, Ben.
We're at the bottom of the channel.
We're at the bottom. I'm thinking weekly expiring, so a Friday expiration credit spread. And I'd like to see if you're building this in Tradier on the chain.
Yeah, I will.
All right. So as far as exposure, I want to actually take this trade, so I don't want too much exposure. I'm curious to know how much premium. Look, I think I'm bullish on it. Let me look at the technicals quick. We don't have anything upcoming. Earnings aren't for a while. Let me just look at some technicals here. So we're pretty bullish on the moving averages. Overall, 14 buy signals, 9 neutral, 3 sell. That's for the month. For the week, it's just about the same. Analyst ratings, very strong buy. Not that necessarily matters for just the next week, if that's what we're thinking. Not strung to that. We can, if we want a longer trade idea here for Amazon, I'm open to it. Next earning reports in 38 days. All right. You bullish on Amazon, Ben, or what? How could you not be?
Yeah, I think I am, and especially because we're at this lower channel here.
Yeah.
I might even say I'm bullish this week on Amazon.
Yeah, I am.
So
I see us floating back up into here somewhere.
I think the trade idea might be taking an at the money put credit spread. Collect a good amount of premium here. So
yeah, I'll pull up your screen.
Switch those screens over. I'm looking at Amazon's chain here.
Expiring
Friday. And what are we pre-market? What is it showing?
Let me pull it back up. Pre-market 230.6.
230.6. Okay, so we're all the way up to 230. We're gonna have to see how these prices would adjust when the market opens. What was the close on Friday? If you got that information.
Close on Friday, last 228.15.
Okay, so we'll use the 227 as our proxy for at the money right now for when we open. So if we sold the 227, if we sold the at the money, and then let's do a $2.50 spread. $250 at risk. Send that to our ticket. Quantity of 1 for about $1. That's a pretty decent return.
It is. 227.50
to win $1. All
right, so let's look at this now.
What's the percentage on that?
Well, we're making $1 on 250.
It's like a 40%, 30 to 40% return.
Here, so listen.
That's a lot higher. Well, I mean, yeah, it's a lot higher because we are at the money, but our 20 delta spreads are typically targeting about a 20% return.
All right, so now this gets interesting, right? So now this is the 15-minute bars here, okay? So we can see this was Friday's open. 15-minute bars tell a different story, huh? It's crazy how charts. I hate looking at charts, man. I really do. So, I mean, am I wrong? Okay, so I don't know what caused this. This was at the open last Wednesday. Did the market do that Wednesday?
I don't remember, but is it actually a big move? Like, what's the actual dollar value there?
Yeah, I'll go back. Let's see.
I couldn't see.
It just looked big compared to the other candles. So we're talking 237 down to 231.
Decent move.
All right, so yeah, we're not going to look at anything lower, but all right. I do think that over 227.50 is a good play on Amazon this week. And I think, similar to like sports picks, if you're going to put a bet out there for people to take, you got to take it yourself. I think I'm ready to do this. How do you feel about the market this week? Knowing that we're so baited up here, if you will, we're synced. How do you feel about the market this week?
I feel like we're gonna push higher. I mean, we've got FOMC this week. The Fed is likely going to announce rate cuts. I know there's a lot of price already built in for these rate cuts. Now, here's the danger. If for some reason the Fed does not talk about rate cuts and they don't do anything for whatever reason, we're tanking. The market's going way down.
You're here first. Okay. And for people listening who maybe aren't as in tune with why or how, can you give at least your 2 cents on why that would happen to the market?
Well, everybody is, I'd say for the past couple of weeks, we've all been anticipating a market or a rate cut to where price, and I think what's been causing the market to bump up, even through a pretty terrible jobs report. Yeah. It's this anticipation of a rate cut. So the market's been drifting up. We've not been getting the best news in terms of overall economic stability with jobs here. Yeah. And I personally think it's because of that anticipation. So if we don't get a rate cut, I mean, just think about how much we've pushed up over the last couple of weeks. I mean, I think that's the danger zone right there.
Yeah.
I think it would be, if you want a lotto play, here's a lotto play. The lotto play would be buy way out of the money puts on SPX for super cheap. And then if for some reason the interest rates don't get cut, those will cash in.
Lotto play.
Yeah.
Not financial advice. Okay, so here, can I tell you what I was looking at? So here's what I was thinking. So you had the 227.5, right? And for $100. And again, I'm not pulling the trigger on this. Maybe I'll put an order out there, and you'll make sure I don't fat finger it this time. All right. Yeah. But here's what I did. I moved it down to 225. All right. So now we're talking. Let's look at the daily bars here. I mean, again, we've had 3 days of red action in a row for Amazon. When you're trying to see how many times that's happened, last time we saw 3 red days, big bounce back, all right, for 4 or 5 trading days. More than 3 big ones here. Again, big drop off there. But my point is I moved it down another strike to 225. All right, so now we're talking a decent amount of breathing room here. If we're looking at it on the 15-minute chart, I suck. All right. My point is I could still collect around 70 cents here.
Can't see that.
Pardon me. So if I sell the 225 put and I buy the 222.50, that means I got $250 in exposure to collect. We're just going to call it $69-70. We'll see what happens when the market opens. But for $30 less in premium collected than what you were looking at, for a whole nother $2.50 in breathing room, I like that personally. I don't know about you. What do you think?
Yeah, I like it. I think I'm more bullish on Amazon to where I would just go closer to the money.
All right.
Because what's your risk at play here? It's more than
what
the previous risk we talked about was, and I think if our thesis is bullish, let's go bullish. Let's collect more premium. Let's lower the risk. Because here's the thing. If we drop below 227.5, we're dropping below 225.
You think? Yeah. That's fair.
So that means that we broke out of that bullish channel and now we're trend reversal. Now we're trending bearish.
Yeah.
So I think
before you said if we go below, 257, 227.5 and go below 225, I was ready to say, hey, why don't we each take it at your trade and my trade and see how we do at the end of the week? I'm rooting for 2 winners.
Yeah, of course.
You want to do it? Let's see, or maybe see how the market opens. Put an order out there.
I'm not even going to put an order in because pre-market Amazon's over 230.
All right. So here's what we'll do. If you and I, either of us decide we want to take a play, let's promise ourselves and the listeners we'll post it on X.
Yeah. Now, a play that I probably will take.
Is that SPX play?
No, there's another lotto play that's cheaper that I was just thinking about.
What is it?
Buy calls on VIX far out of the money.
How far are we talking?
What are we trading at right now?
14.95.
14.9. Dude, VIX is so low. That's crazy because 6 months ago we were like, is VIX ever going to fall below 17 again?
Yeah, here's 6 months ago.
All right, I'm going to look up the chain for VIX, and I'm going to look at the 9/24 expiration. And if I were to buy, $16 strike, you could probably pick that up for like $1. If interest rates don't drop, VIX is going to like 40.
All right.
Doug is saying UXIX, the 2X daily VIX. Let's take a look at that. Now we're going off the PeakBot watch list. UXIX. Is that correct? Oh, UVIX.
UVIX.
That ticker makes more sense.
Oops, sorry. Let's get this back.
Yeah, look at that. Look at that.
Zoom in. Oh no, you can't really zoom in much.
I'm not familiar with this ticker, so I just want to see how we've reacted in the past. So let me take a look at this. Okay, yeah. This is the 2X. We could pop.
So pre-market, it's down about 20 cents.
Mm-hmm.
Trading around 10.30.
There it is. There's your lotto player for the week. Go to the September 19th strike. I mean, dude, even buying the $11.
Don't call it lotto play unless you're taking it.
Yeah. So all right, the September 19th expiration, not strike, I said strike, and dude. I mean, if we pop $12, is gonna buy that for a quarter. Buy like, I don't know, 20 of them. $500 trade. All right. Maybe we'll go 10. That's our lotto. I'm in. Order submitted.
All right. For how much did you collect? Or no, you bought to open. Okay.
I bought.
All right. I put in my Amazon order too for 70 cents. We'll see if it fills. But I put that in there at that 225 strike. So let's go Amazon.
Let's go. All right, we strayed a little bit from our stock in real life there, and
we landed on it. Here, let me pull it up. I gotta remove one.
I feel like at least my brain is strayed now.
All right, here we go. I put it out there for 70 cents. We'll see if it fills. Trying to stay above 225. What we got to do is, for anybody who loves that trade or wants to take that trade, we got to start throwing these in our Discord, an alert.
Yeah.
click to trade, click to form, click to build. All right. It's coming to PeakBot alerts. If you're not ready to automate or you don't have a beautiful brokerage Tradier account, you can still take our trades manually with our alerts. All right, there's stuff. There it is. Amazon. Let's keep moving. Bot shop.
Yeah, let's do bot shop. We've got the final week of Shorbo this week.
Let's do it.
After Shorbo, I think we're going to get into the Ben bot, and we'll spend several weeks on that. But yeah, let's hop into the final week of Shorbo. Try to keep this a little compact because I realize we're already at 9 o'clock.
Yeah, my bad.
No, all good. So the last component of the Shorbo trade we're going to talk about is VIX, and it's very minute differences, and we'll see that. But this is where we're at the point where we've kind of established the strategy. We're happy with the strategy. Now we're just tuning some dials real quick, and we're trying to figure out how we can get the most out of a particular strategy. So we're going to look at the VIX impact. Right now, we're using the call side theory for VIX, and we'll get into that, especially when we look at the charts. So we're going to look at, hey, what if we didn't look at VIX at all? Then we're going to get into the call side theory, which is what we're using now, and then VIX on both sides, and that'll make more sense, that statement, after we talk about the call side theory. So no VIX consideration. What are the pros and cons there? It means we're going to get an order every time price breaks through orb. No other rules, just break through orb. So we're going to get more trades, and we're not going to miss out on a win because of a VIX filter. Now, we're also going to not miss out on losers, and we'll see how much that's impacted if there's more winning than losing or more losing than winning. The downfall here is, of course, that falling VIX can mask weak bearish momentum and have false bearish entries. And that's where the call side theory will come in. It's just overall less protection. You're going to get reversed out on certain days. So what do we mean when we say falling VIX can mask weak bearish momentum? Well, get into the call side theory. This avoids what we're calling the classic down on collapsing volume fake out for call entry. So if VIX is decreasing, right? VIX decreasing, theoretically, the market is increasing. So on days where VIX is decreasing, momentum is pulling the market up. It would be tough to win a call side entry, right? If we're selling call credit spreads because we broke down below orb, but VIX is down means market up means against our position, market up means against our position. We want to avoid that type of scenario. So the way that we've built the Shorbo trade is it takes into consideration VIX. If VIX moves down 50 cents, that's enough of a move for us to say, like, hey, any downward movement today might be a fake out. So we are going to not take the trade on those particular days. So that's really the call side. Now, on the put side, we're not necessarily using the same parameters. Like if VIX goes up overnight, we're not saying we're going to sit out of the put side, because the theory behind that is, hey, markets tend to recover fairly quick, especially of late. We might bounce back even today. Let's stay in that, or let's place that put trade. Let's keep moving. But that could, of course, come back to bite you. The put side can still get clipped on, if there's a fear spike after an orb high breakthrough. And as we see in the bullets here, not all low quality days are filtered. Now, when we get into the actual results and we show our charts, we'll see why we landed where we landed. But call side theory is, hey, use VIX for the call side because we want to prevent those fake out days. There are statistically less fake out days on the put side, meaning that we're bullish because of if VIX goes up overnight, we might reverse during the day. There's a good chance that we bounce up at some point during the day. it doesn't really negatively impact us to keep trading those puts. In fact, it might even be a benefit to keep trading those puts. Now, what happens when we go VIX on both sides? So we're going to get fewer entries because we have VIX on both sides. The logic would be symmetrical, and that's how we're going to present it here. So 50 cents up on the put side would prevent us from entering. 50 cents down on VIX would prevent us from entering the call side. You're going to miss wins as a result of this strategy. You're going to miss a lot of double wins, those rare periods where we get to calls and puts at the same time and then win on both sides of the trade. It happens rarely, but when it does happen, it's great. You love those days. So Dillon, any questions on the VIX impact before we get into the actual charts here?
No, important that we take this into consideration with a strategy like Shorbo when we're looking for momentum in one direction or the other. So the VIX coming into play on the call side makes a ton of sense. Let's take a look.
Cool. So we're going to start out with our Shorbo base here. And this is the call side theory where we just have a VIX filter on the call side. So the numbers to remember here are P&L at 18,000, compound annual growth rate at 39%, and max drawdown at 14%.
Starting with 10K, Ben. Sorry, I just want to mention that too.
Yes, starting capital 10K. So let's take our first test here and go no VIX. So that's how the chart changed. And remember, I said at the beginning, minimal consequence here with this update. This is more of a fine tuning of the strategy to make what we see to be a good strategy even better. So no VIX, P&L comes down a little bit, CAGR comes down a little bit, max drawdown also comes down a little bit. Now, I remember looking at this before we launched Shorbo and thinking, okay, well, do we want to sacrifice some gain for a lower drawdown? And really what sold me on not doing that was, take a look at the chart. So this is where we're at right now. This is no VIX. It's just a little bit
smoother.
Yeah, we're just a little bit smoother right now. And these periods of a drawdown here, they don't look that much on this screenshot here, but in reality, from this point right here, for example, down to this point right there, that's like 6 to 8 weeks, this little period here. That's kind of where we're at over the last month or two right now. And
you feel it.
It's not fun.
Yeah. And for us, transparently, right? Like there's a select group. Well, I shouldn't say select. There's a wide group of retail traders who unfortunately don't have the patience to get through these drawdowns. We gotta, as an algo provider, our bots gotta be profitable. But on top of that, if you want to keep your traders happy, gotta prevent these drawdowns as much as possible because it's short brain. It's what are you doing for me now? So yeah, it is hard to see, but that's a big deal right there.
So we've got our base, we've got no VIX. Now what happens when we put VIX on both sides, our VIX filters? So our P&L kind of stays the same as the no VIX, right? The compound annual growth rate barely changes. Now the drawdown comes down quite a bit. So when we're looking at our base of 14% drawdown down to VIX on both sides, the drawdown is only 10.4%. That's tempting right there. That is.
I was going to say, so what are we giving up on the P&L? About 2K?
Yeah, about 2,000. You're giving up 3 points on the CAGR, but you're getting 3.6 points on the drawdown.
Are we thinking live right now?
No, at least I've looked at this plenty of times before. Again, just look at the curve. Where we're at right now just looks smoother to me.
It is.
So yeah, very, very difficult to make these decisions before putting a bot out there. But ultimately, like you said, Dillon, like traders aren't patient. Traders aren't going to want to see these things play out over time. We need to provide the smoothest curve possible. And, that's why we went with the call site theory, because it gave us the smoothest curve for this particular strategy that we can get. Really no other reason than that, because the other results you could make an argument, I'd say, for the VIX on both sides. You can make an argument that should be the live bot, right? Lower drawdown, you actually have a better MAR ratio here, which is, we don't get into that, but the P&L doesn't suffer too much, the CAGR doesn't suffer too much, but it's just that visual of, hey, how quickly am I making back my losses, and how long are we in these drawdown periods for?
Yeah, and right now I'm doing some math. So let's see, 1505 plus 44. So what I'm trying to figure out is the drawdown, because Ben, I think Shorebo's in its largest drawdown we've had in back testing and live trading right now.
Yes. Yeah, and that's not reflected on these charts, because the testing here only goes to July 7th, because that's when we started this series. So if we showed more data, we would see a little bit of a dip right here.
So yeah, so when we launched the strategy, with the launch criteria, if you will, we saw a max drawdown in the back test of about 14%. We got close to that when we were testing it internally, I think before we had launched it to the public. I'm going to pull up the results here just so we can see it. And Ben, I think we're close to a 21% drawdown right now on Shorebo from August into September. So again, not fun, but we're going to be one of the only platforms who shoot you as straight as we do. So here's July. All right. When we launched the strategy right here, I believe it was July 7th, we launched it to the public. All right. So very profitable July, up 7 points, over $700. But Ben, the skid starts here in week 3. Well, yeah, technically week 3 in August. All right. So we see about a $1,500 loss in the back half of August, continued into September here. All right. So Ben, did we have any trades at the end of last week on Shorebo?
No,
I don't think so.
Because of 30-year bond auction and Michigan consumer sentiment report.
Yeah. So when we take all these things into consideration, yeah, that's, it's not perfect drawdown math or equation, but it's near a 20% drawdown.
How are you getting that though?
Well, so I'm just taking from like if somebody was to start here, for example, right?
Oh, okay. So you're taking, okay.
That's where the drawdowns, the largest pullback we've had. And I'm cherry picking dates, right? But that's because somebody could have come in. If you started right here,
Yeah. I got you.
So, but anyway, again, not great. We're always considering adjustments to the strategy, but it's still a very sound strategy capable of producing very sound months here. So, we're going to keep an eye on things, but hoping for a turnaround in Shorebo here. Could we enter a position today? Anything? Well, the VIX, no. VIX
I think we will.
Okay.
Yeah.
All right. Anything else to learn from the bot shop on Shorebo here?
No, I think that wraps it for Shorebo, and that's the final bit of the Shorebo series. Excellent.
Well, a lot to learn. Opening range breakout strategy, millions. I don't know. I always say millions of people trade that. I don't know if that's actually true, but certainly a lot of people trading the opening range. All right, Ben, moving on. We got about a little less than 20 minutes till the bell here. So let's give people what to look out here for this week. And let's get on out of here. Yeah.
Cool.
All right.
So economic events this week. Not much going on today. Tomorrow is the start of FOMC. We've got retail sales pre-market though. Don't really turn off for that. We got a 20-year bond auction. But again, FOMC does start tomorrow. Then Wednesday is the big FOMC day. But even before that, pre-market, we've got building permits, housing data, We've got the interest rate decision, which the entire economy is hanging on right now, at 2:00 on Wednesday. So stay tuned for that. We got JPOW going on at 2:30 Eastern. Moving into Thursday, we don't have much going on Thursday, but typically there's some aftershock effects on the day after a rate change decision. And then Friday, we go into a pretty quiet Friday. So interesting week. A lot of nothing going on the bookends. And then in the middle, we're just jam-packed full of what's going to happen.
Makes for a stressful week of trading. So, be playing your defense if you need to. Keep an eye on all positions as always, right? Whether it's fully automated or not. All right. So keep an eye out for everything. Anything else we should discuss here before we wrap?
TradingView is a great place to get your economic data. I also use Financial Juice, which is a really interesting website to get data from. This little flyout here on the left is, in my opinion, the best source probably, because it includes economic events, it includes political events, and it includes major earnings. So like during earnings season, if Apple's reporting earnings, Amazon and Nvidia, that's all going to pop up on this calendar here. So I like to keep an eye on, I'm going to refresh this too, just so we get everything. I like to keep an eye on Financial Juice. It looks like, and see, look at this, like Trump speaks at 2:00 today. That's not something that popped up on TradingView. And then we can go over to the president's daily schedule, just confirm what we're seeing here. It looks like 2:00. President participates in a bilateral meeting with.
Pronounce that.
Yeah, I don't know how.
Okay, meeting with the church. Constantinople.
It looks like this is a person. Yeah, Constantinople is correct pronunciation. But
all right, well.
So
hot take. I don't think that one's gonna move the market.
Yeah.
Just my opinion. Who knows?
Who knows these days?
I once thought that about the Michigan Consumer Sentiment Report. We know that's changed forever. All right, guys. So look, PeakBot, if you're not automating, you should be at least thinking about it. We're providing you strategies. One that we did talk about today, which happens to be our best, safest, most consistent bot, is our daily covered call strategy on IWM. Ben bot. Ben, I would imagine you anticipated trade today. There was no crazy gap up on IWM, at least doesn't seem to be. So let's see what we can do. We're just skirting green right now. It's September. So best of luck to you. And I think that'll do it. So we'll be live again Friday at noon Eastern time. If there are any questions throughout the week.
Rerun this Friday.
Rerun this Friday. Okay, we won't be live, but there will be a show, and you can tune in. It will be a rerun. All right. Well, that's it. Thank you so much for tuning in. We will not be live on Friday, but there will be a show. Enjoy your week. If you have any questions, use our chat, peakbot.com, fully automated trading strategies. Thank you so much, and we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.